That'll be with Brian Hartzer. A great time to invest. 3 perspectives on fintech.
Morning, everybody. And Steve, well done. That's a great setup. I was talking to Steve before this, and he said, we've got a lot of presentations. We want to make sure the day ends on a bang, so we want to set the bar nice and low at the start. So would you mind going first? And I was happy to oblige. So settle in. So just by way of introduction, I spent my career in financial services. I spent 5 years as CEO of Westpac. And the last few years, I've been focused on the startup world. I'm chairman of 3 startups. One's in it gets classed as a buy now, pay later. It's actually not. It's before pay. Rejig, which is an HR technology, AI-driven startup, and 2B, which is one that I founded with some former colleagues. And I also I've got this background back from Westpac of doing corporate venture. I've been really interested in going to Silicon Valley for 15 years at least. And then I've got my own portfolio, like many of you, of angel investments I've done. And now I'm doing the founder thing as well. So I thought it'd be interesting to share some thoughts on all 3 of those perspectives. And I wanted to focus on fintech in particular and make a bit of a case for why fintech's quite an exciting place to be, notwithstanding the stuff you read about volatility in the markets. So let me tackle this perspective from 3 different angles. And first of all, just a bit of background on why I think fintech is really quite exciting at the moment. I really do believe this is a once-in-a-generation opportunity to be involved in businesses that are going to make a big difference. And some of the macro things that are going on here in particular. So you've got big demographic trends. So Steve talked about the transfer of wealth. The other thing is, I'm going to go out on a limb here and say there's a few baby boomers in the room here. I don't suspect you're actually quite ready to hand all your money over yet. And in fact, baby boomers will come back to this as an opportunity. But we're talking about 20% of the population, 46% of the household wealth. They're going to be a major driver of economic trends over the next 20 to 30 years. And so that's quite exciting. We've also seen people getting much more comfortable with digital adoption. COVID's obviously accelerated that. The combination of those things means there's an openness to new players in businesses that perhaps hasn't been there in the past. Secondly, tech costs and interoperability. So the cost of technology has dropped dramatically. In the old days in banking, it used to cost us hundreds of millions of dollars to do big systems. The business I'm going to tell you about, we built our whole system for under $1 million. And a big part of that is because there are so many componentized systems now that can talk to each other through APIs that the cost of actually setting something up to work is dramatically reduced. And that makes it much more possible for new players to come along. Open banking and data. So this is just starting. You've read about it. It's just starting to hit as a feature. Traditionally, the big players had this dominant capability because of all the data that they owned. That's getting opened up. There are new tools to access that data. That means that some of the competitive advantage that incumbents have had is going away, but also the ability to create new services off the back of using data and AI to add value to customers is quite exciting as well. And finally, regulation. So I would argue that there's been a tremendous amount of over-regulation, particularly in Australia, in the last 10 years. The consequence of that is that the boundaries of what the traditional players want to do is shrinking because they're all trying to simplify their business. As a consequence of that, they're opening up segments in the market to being underserved, and that's creating some new opportunities as well. So let's go through the 3 perspectives. I'll start with the corporate venture opportunity. And this is important because big companies have constraints. It takes them a long time. They've got big, complex product systems. They've got limited resources to do things in terms of people. It's all very complicated. And so engaging with the startup community for a corporate is quite exciting because it means, number one, you can learn what's going on a lot faster. Number 2, you can, in some cases, create an innovative solution to a problem that is going to be too hard for you to do internally. It can also give you some protective defense because one of the Reinventure was a venture capital firm we set up within Westpac. The main driver of that was to know what was going on so that as things emerged, we could step in and be well positioned to partner with those companies over time. And potentially, it's actually the last goal here is there can be great financial rewards. And just to give you a sense of this, at Westpac, a couple of the deals that we did generated over $1 billion in cash profit for the company because we got in really early on some companies and we were able to take advantage of our position to build an advantage position with those startups. So it's quite, and the other important thing about corporate venturing is that it means that there's a market for startups in Australia to get strategic investors from these big corporations, which isn't about what's going on in the external equity markets. Now, from an investor perspective, here's the way I think about it for what it's worth, and that is that there's a number of themes that are created by those general opportunities I talked about at the beginning. And so some of them, you get a sense of here, there's access to data and insight. There's customer management, whether that's managing a back book of customers, helping brokers do their business better. There's a business of the back hound over here, which is a good example of that. Automating processes that are highly manual. So Nano Home Loans, for example, is automating the mortgage origination process, selling that technology to existing players who are struggling to keep up and stay competitive in their service quality. Targeting specific segments, which is another home loan example, Athena Home Loans. On payments is a huge area in itself, adding more value to the payments. Slip is a company that does value-added receipts that creates a better proposition for merchants and the banks that provide credit cards. Before Pay is a business model disruption. So essentially it's disrupting payday lending, which is a really egregious business that takes advantage of people. Before Pay is a much more ethical solution to a genuine need for people who find themselves struggling with cash flow week to week. And then underserved markets, which is an example of where banks have retreated and therefore created an opportunity. And with that, I want to turn to the founder perspective, because sometimes you come across an opportunity that's just so big you can't pass it up. And this is one of those that I stumbled on with some colleagues. To be is particularly focused on the baby boomer generation that Steve referred to before. Some quick stats for you. 5.5 million Australians born in this era. 3.5 million of them have not yet turned 65. And that's really important because it means, Steve's point about timing, all of those people are going to turn 65 by the end of this decade. And so there's a huge number of people who are passing this kind of psychological milestone and starting to think differently about how they want to spend their life and their money. In terms of assets, these people have $2.3 trillion in home equity. Just let that number sink in for a bit. And they're generally living a lot longer and healthier. This is not like any previous aging generation. They're looking to make the most of what is really the prime of life for them. Now, the problem that's emerged is banks have stopped lending to these people. And the reason for that is that regulation has become interpreted, the so-called responsible lending regulation. The banks have essentially interpreted this to mean that if you can't pay the loan off out of your cash flow, surplus cash flow, then that is not a responsible loan, irrespective of your asset position. And that belief has essentially become embedded in the regulatory approach and the credit processes of the major players. And so just at the very time when a bunch of people are looking to access the wealth that they built up, particularly in their homes, the banks are saying, sorry, I can't help you. And this is a big opportunity that's growing. So you've got a bunch of people whose children now are looking to get on the property ladder. Maybe they're looking to renovate. Maybe they want to buy a lifestyle asset, buy a car, a boat, go on a trip, but basically enjoy the wealth that they've built up. The banks now are saying to them, your only option is sell your house or sell that investment property or sell those shares. And in this sort of market, a lot of people are saying, well, I don't really want to do that, thanks. And so if you think of this from a competitive point of view, a white space has emerged, which basically says if you have paid off your home and you're affluent and you're over 55, essentially nobody wants to help you. The banks are focused on people who are under 55 and still need a mortgage. There are a few players who are focused on people who are financially vulnerable and whose only asset is their home, so the traditional reverse mortgage market. But we found this big white space, which we thought this looks pretty exciting. So we focused on this and we found that we could actually develop a solution. We call it Equity Advantage. It's essentially a home equity loan, 5-year loan. You can borrow up to $500,000. And thanks to technology and the way that we have found a way through the regulation, you can apply online on our application. By the end of the day, we can have settled the mortgage and put the money in your account, which is a pretty extraordinary customer experience compared to if anyone's gotten a mortgage recently, you'd know it's a little more difficult than that. So great example of a market opportunity that's opened up because of some of those trends. Combine that with technology, a team of people who are all experienced bankers who actually know their way around the system, and we've been able to come up with something we think is quite cool. Now we also, final point, we know that product itself can be copied. There's nothing incredibly magical in what we're doing. So a very important part of creating a business here is a strong brand that resonates emotionally with people. And that means helping them through the issue that they're trying to address, which is if you're going to do a family loan, how do you set it up so you preserve not just your financial position, but also your relationships as well? So hopefully it gives you an idea of how some of those broader trends can turn into a specific opportunity. There are lots of great businesses like this being developed in Australia at the moment. And so just to wrap up, I think this is really a good time to be investing in fintech, not regardless of what's going on in the broader financial markets. There's a whole bunch of different themes here. You should find one that really resonates with you. Look for businesses that they're doing those sorts of things. The Australian ecosystem, as you can see from the people around the room, this is really an exciting time. And we've proven in Australia, unlike in a lot of other industries, that we can actually create businesses here that can compete globally. And one of the great benefits of technology is it's a lot easier now to take businesses overseas. And certainly from a 2B perspective, we see great opportunities in Canada, the UK, the US, and others who have this same demographic challenge. And also, I think it's fair to say that a lot of startups are very motivated to succeed. There's a lot of opportunity for private individuals to get involved, and you'll find some very grateful investors out there. And I just finished with saying we're on the Wholesale Investor platform, and if the 2B story gets you excited, we'd love to hear from you. So thank you very much.